Hi, Mark the Meerkat suffering here at Free Online TradingEducation.com, brought to you by Grok Trade, where I'm an analyst, host of the GrokStar Trading Room, perhaps your future mentor. Well, here's a trade that we had in the GrokStar Room this morning, actually two of them on FSLR. It had been running up after a gap down in the morning, and it was running up, did a nice bull pullback here, broke through, filled the gap, and kept on running right here to the R1 line, pulled back, and we did do one long in here, and then it pulled back, stopped us out, and now it's doing another bull pullback here with this R1 line as support. So we get ready to go long, see what happened next. Hey, it popped up above there and pulled back right to my entry line. I'm now long here at $28.28. We're long. There's a little pullback right about to entry, and then takes off. And again, these resistance lines and the pivot lines are very strong support and resistance for solar, and it's right there at it. So we were watching it very closely, and sure enough, it did get above it. And then when it pulled right back to that R2 line, pulled below it, tagged down, and now it's forming what we call a rising wedge. A rising wedge. If you want to know more about what a rising wedge is, go to freeonlinetradingeducation.com to the free chart school. Look for rising wedge. There's a description of it there, and then down below here is a picture of it where it comes up, and it's getting tighter and tighter as it goes up. This is a bearish formation. If it breaks down below this, chances are it will decline, and so we are long currently in this bearish position. So let's go back to see what we have. Let's go back to our chart, and you can see here we got raised up here, and it's getting tighter and tighter and tighter. Again, I'm already long. It's a bearish position, so I'm keeping my stop just below this lower trend line, and we have this R2 line, which was resistance and now can be support. But if it breaks those, I want to be out. And what does it do? It's still in this. Look at this wedge. Look at how that keeps going up, and then it broke it right there, as well as a 20-period moving average, and I got out even before it got to the R2 line at 28.28 for 1.1% in that trade. And I was watching it very closely, and it did. It broke down below this line of resistance and support, the R2 line, and it broke below the 20-period moving average, and I went short at $29.20. Let's see what happened after that. You see, this is a bearish position, remember, or a bearish formation, and after that it was at the $29 mark, and it was just support, and then bam, now it's down to the R1 line. Again, this stock loves to honor these support and resistance lines. Does a bear pullback there, does a bear pullback here. Boy, if it breaks below that, it's going to be tasty. Boom, right below. Now it's at big red, the 200-period moving average. Came down, it was support. Comes up, bam. It's like ping pong now here between this line of what was support is now resistance, and this line here is support. Let's see if it goes back and forth a little bit. Breaks below it, comes down, and now it's what we call filled the gap. Look at that. It ran up and it filled the gap. Right here, there's the entry line, this dash line, and then also is the pivot line. Oh, both of them at once. Possible line of support. Let's see if it breaks down or if it. Oh, it broke below it. Oh, and then it popped right back up. So look at that, just a little quick jab below and up above, and I'm still short. Still short. If you notice here, this green line is a 20-period moving average, and I had been putting my stop just above it, because it hadn't crossed and closed above that at all. And here now it's starting to test that, getting close to my stop, and then bam, jumped out of there at $28.52 for 2.3% in 1 hour and 7 minutes. But I just want you to look and see that this rising wedge, although it looked very bullish, look how much it fell after it failed that bearish pattern. Well, this is Mark the Meerkat suffering. If you want to do a little better in your trading than you did last year, we are having a 1-hour webinar for free this Wednesday, February 6th, right here. You can go to coming events at the free online trading education site. Click on Psychological Analysis for Traders. Here's a description of it, and then down below is a place where you can actually sign up for that webinar right down here. And if you can't be there Wednesday at 9 o'clock Eastern Time in the evening, Well, go ahead and sign up anyway, and you'll get a recorded version of that webinar. Well, this is Mark the Meerkat Suffering. To paraphrase an old Yogi Berra saying, 80% of trading is psychological, and the other half is tactical. Trade well.